Hello everyone, my name is Vishal Subban. Welcome to this week's weekly market view for Monday the 27th of Feb to Friday the 3rd of March 2023. Let's get started. Alright, since this is the start of the week, let's start with the Nifty analysis and also let us start with the weekly chart because there are some crucial levels that can get triggered in this week. So this is our weekly chart, and I know that there are already some levels that have been plotted on the smaller time frames. We'll just probably remove some of the levels here. Replot those levels once again on the price chart. So here is the weekly chart, and as you can clearly see, a very strong bearish candle got created last week. We are still reacting to this weekly level of supply, which has been pointed out several times in the past weekly sessions as well. And as long as this weekly supply is holding, we are still going to see a further downside in this market. We are now coming very close to the budget lows as well on the Nifty. So we just got to be a little careful now, and let us see if those lows break and price is able to print a new low. Then most likely the market is probably going to test the level of 17,329. I will just show you that level quickly. Just minimize my video. So this is the level to watch out for, 17,329 to 17,266. It's important, and this low is going to be a very key level because all the market participants are possibly going to be going or shorting heavily below this low, right? So this was the low that was created on the day of the budget, and if this low breaks, then there is a very likely possibility that the markets will try to push a little further down, trying to create a new low. But we also have this gap level of demand in play, which is 17,329 to 17,266. So the key levels of demand are going to be this level over here and also a lower level, which is this gap level over here. I'll be surprised if market doesn't react to these levels in the coming days, and we don't happen to get a bounce, because this is a pretty decent area of demand. And in case if the markets do get over here, because of this support trap, as you want to call it, markets might come into this area and then give a strong bounce. So let's patiently watch, because this week markets are going to be very interesting. I'm looking at the SGX data right now. The SGX Nifty data is pointing at a slightly negative opening on the market. All right. On the supply zone side, we do have multiple areas. We have this one area now, which is freshly created around 17,800 to 17,895. So this is a key level to watch out for. We had a very nice reaction from this overhead supply zone, and this was also a level that was identified in some of the past weekly review sessions. So in case if anybody took the short, you would be sitting in good profits as of now. If you look at this area, this is also a key area of supply. This is a gap preceded by strong candles, and if we do happen to break this low, then this supply zone is going to be acting as an interim speed breaker for the prices to either remain range bound or consolidated, which means that in due course of time there will be a possibility of the markets moving in this range over here, at least in the short term, before the range breaks and moves to the upside, or before the lower range breaks and moves to the downside. So these two areas of demand and supply are going to be very key on the Nifty for the coming. Let's move on to the Bank Nifty. On the Bank Nifty, we have broken the crucial area of 40,000, which is considered to be the round number. Let's quickly look at some of the key levels on the Bank Nifty. So let us first start with the weekly chart of the Bank Nifty, and this is the reaction that we have got already from the weekly supply zone. Prices have reacted extremely strongly. We do have this level of demand, but before we even get to this level of demand, there are some key levels of demand that we would want to look at before even price gets there. And let's quickly have a look at this area here. So we have this drop base rally, 38,710 to 38,441. Again, what is very important to also check is this low over here, right? So again, this low is also more or less the low that was created on the day of the budget. So prices have bounced once from here, twice from here, and have even given a weak bounce around for the third time here. So this area is going to be a very, very strong support. Any break on a closing basis on this area will lead to a further downfall and a very, very strong fall in the market, right? So 38,710 to 38,441 will be a level to watch out for in the coming days, in the coming weeks on the Bank Nifty. If we look at the area of supply, let's see the chart, the 60-minute chart. We do have this area of supply from where the markets actually started a much steeper fall. So markets gave a strong bounce, closed into this area of 40,900, and since then they are just been consolidating, right? So you see these lows over here are going to be very, very crucial, and all the market participants will be keeping a close watch on all these lows, right? So if these lows break today or market creates a new low, then markets are likely to move into a slightly lower territory on the charts, and this is going to be a key level to watch out for. Okay? So we are still trading at 39,905. This area is far away. And one more interesting thing that I also noticed, I'm just going to take you quickly to the futures chart here. So let me change this quickly. And this is something that you may not have to do always, but it's also a good idea to keep a close watch on what's happening on the futures chart. Let's look at the March futures. I'm just going to draw a level of demand over here. You will notice something that has not yet happened on the futures chart yet, right? So if you look at the spot chart, this level of demand is already tested, right? But on the futures chart, this level is not tested. Again, if you go by the concept of support, this is an area of support, this is an area of support, and this is an area of support. So there is another possibility that the market participants will try to push the price to create a new low, inducing new shorts in the market or trying to create more bearishness in the market, only to trap all the people who have shorted below these lows to reverse the market and take it back up, at least up to these levels, right? So this is going to be a very, very key area. And for this week, for a change, instead of looking at the spot chart, I'll be closely watching the futures chart here to look at whether this level holds or whether this level breaks. Any break of this level is going to lead to a further fall in the Bank Nifty. But if this level holds, we are about to get a very, very strong bounce, at least up to this point, and then further on to this gap level. So this is going to be an area to watch out for on the Bank Nifty on the March futures contract. Now let's look at the Fin Nifty futures. So let's quickly go to the Fin Nifty. And more or less the Fin Nifty is behaving in a mixed manner like the Nifty and the Bank Nifty, but there are also some key areas that we want to look at. So let's go here first. And if you look at these lows here, very, very similar lows printed. Again, this area is going to be a crucial area on the Fin Nifty, 17,756 to 17,672. We are currently trading at 17,972. So there will be some overhead supplies, but in case if this level breaks and prices do something like this, then we might see prices testing lower levels. But in case if this level holds because of the Bank Nifty level, then we might again move into a consolidation and more or less prices will try to come to fill this gap level in due course of time. If we go onto an intraday chart on the Fin Nifty, since some of you are also trading on the Fin Nifty, so let's quickly go here. So there is this level of supply here. There is this 18,373 to 18,452, again coinciding with the round number of 18,400. In an ideal scenario, we would expect to see these lows broken first before price travels into this supply for the price to further fall down. But in case that doesn't happen and these lows are held, then the most likely scenario is that we might move into a wider range consolidation on the Fin Nifty as well. Let's now move from the Nifty and the Bank Nifty, Fin Nifty to the USDINR, which is also considered to be a very, very crucial market when it comes to correlation. So let's start off with the weekly chart of the USDINR, and let us see how the USDINR is panning out for this week. So if you look at the USDINR and if you look at the weekly chart, this is the broader range of supply that we are in, where prices have been testing this area multiple number of times. Now, what is again going to be very, very interesting is that in case if USDINR makes a new high, that's going to be a slightly negative aspect for our markets, because the USDINR and the Nifty Bank Nifty are inversely correlated to each other. So since now we are in a supply zone and we are coming very, very closer to the demands zones on the Nifty and the Bank Nifty, what is also going to be a key index to watch out for is going to be the USD-INR, because if the USD-INR begins to start correcting to the downside, that is going to be a good positive sign for the Nifty as well as for the Bank Nifty to move to the upside. So this is something that traders should keep in mind for this week and not be extremely bearish on the Nifty and the Bank Nifty. Yes, prices can come closer to the sub 17,350, 300 odd levels, 17,300 on the Nifty. But beyond that is something that you should not be looking to go short. So those are the levels to watch out for. And if this starts happening, this is going to create some kind of a counter trend opportunity on the Nifty and the Bank Nifty if the USD-INR starts to reverse and moves to the downside. If you clearly see there is no clean or clear area of demand on the weekly chart of the USD-INR, and the best weekly demand zone is located at around 80 point level. So there's a lot of room for the USD-INR to correct. Whether USD-INR will correct or no, we do not know that, and that is something that we have to be waiting patiently. But if you look at the charts here now on this is the daily chart, and look at all the price consolidation that is taking place over here. So we are, in a very, very tight range of consolidation, and majority of the market participants, what they would be expecting is either they would be expecting for USD-INR to break out to the upside or then break down to the downside. If that happens, the market moves up, then we might see a slightly deeper correction on Nifty and Bank Nifty. But if that doesn't happen and USD-INR continues to move to the downside, then most likely the USD-INR market will possibly take a little bit of support at this gap level over here, and prices might stop falling down. So this is the key area for the USD-INR for the coming week. Now, let us look at some key options statistics for the coming week. This is the 2nd of March open interest data. And as you can clearly see here that we are seeing massive towers of call writing close to around 17,600. So seems like 17,600 is going to be facing a very, very big resistance. But if you look at the bottom last entire week, or in the prior weeks also, there has been a lot of call writing happening, indicating a lot of bearishness in the market. And the support level that open interest is suggesting is at 17,000. Obviously, we don't expect the markets to, just crash towards 17,000 straight away. But open interest data is suggesting that the biggest support or the strongest support level is at 17,000. We might have interim bounces from 17,300 and 17,400 levels, but it's more likely that those bounces will be more or less like dead cat bounces where new shorts would be initiated and markets might push towards 17,000 levels. Let's look at the monthly open interest data for 29th of March on the Nifty. And the 29th of March open interest data is also chosen, is going to be acting as a strong support for this market. Heavy duty put writing is taking place right now. It's too early to judge since the March month has not even started, but because now we have finished off with the February expiry, a lot of contracts are going to be rolled over into the month of March. So once in a while, it's okay to start looking at this data, but the weekly data is going to be more crucial to see how step by step the markets are going to be moving. Let's quickly have a look at Bank Nifty to see what are the key support and resistance levels for this week. On the call side, you have 40,000, which is now showing the highest open interest, but there is also significant put writing that has happened over here. So this is going to be the area where markets are going to have a bulls versus a bears fight. And just like the Nifty data, you can see heavy duty call writing has taken place at 40,500, 41,000, and even 41,500 odd levels. And the support level is at around 39,000. So just like how Nifty is standing at 17,000 with the support, Bank Nifty is also somewhere over here. Now, what is going to be a key area to watch out for this week, as I said, that the break of those lows is where that 39,500 level is coinciding. So 39,500 on a closing basis, if price does close below 39,500, then markets will not have any hesitation to move towards the next round number, which is 39,000. But 39,500 is going to be a key level, and if that holds, then we might see a more of a range bound market between 39,500 to 40,000. And I'm seeing this on the basis of what I see on the charts combined with the OI data. All right. Okay. If we look at the monthly data of Bank Nifty, we can clearly see that positions are starting to build up. There is no clear data over here as of now, but here we can see that put writing is happening at around 40,000 odd levels. It doesn't indicate anything as of now. As I said very clearly that this data is likely to change as the days progress. What is going to be key to watch out for the weekly open interest? This will give us a more clarity on how the markets are likely to move in the coming week. Let's look at the key stock for this week. That is none other than Reliance. And let's look at some of the key levels on Reliance for this week. So let's go straight to the 125-minute chart. Some more the tools here. So what are going to be the key levels on Reliance on the 125-minute chart? So what is Reliance doing right now is it is reacting from a daily supply zone and it is just moving into a slightly consolidation phase. If you look very closely here, we had a level of demand that was violated, and now this can lead to price either creating a drop base and a drop in price, or it can be a drop base or a rallying price. What is going to be very, very key for Reliance is that we have an overhead supply zone over here, which is going to be this 24.2480 to 24.4731, and to the downside we have this area of demand which is 28.30 to 23.11. Now generally when Reliance moves, there's a very likely possibility that it is also going to move Nifty along with it, and the entire index has been falling down, but Reliance is more or less trying its level best to hold on to the Nifty. Now what we would expect Reliance to do is, in case if Reliance starts breaking down, it is going to bring Nifty down closer to those 17,300 odd levels. But in case if Reliance basis consolidates and starts moving up, then it is also going to take Nifty to those upper levels of 17,400 or 17,500 levels as such. So this is going to be a key area of Reliance. in case if price breaks out of this area, the next key supply area is going to be somewhere close to around 2550 on Reliance. But in case if the markets fail to hold on to this area, then we might see even lower levels printed on Reliance. So this is going to be the key levels of demand and supply to watch out for on Reliance. And because Reliance is a heavy weighted stock on the Nifty, it is going to be a major driver for Nifty to move either up, either down, or either sideways. All right, so this is pretty much the analysis for this week. I hope you enjoyed this analysis. Do please give your valuable comments, and if you have still not become a member of the Sharekhan Education channel on YouTube, please click on the Sharekhan YouTube channel subscription button and become a part of the Sharekhan Education channel. Do give your valuable comments in the comment section, and I will see you all next week for some more levels and some key levels on the Nifty, Bank Nifty, as well as the Fin Nifty. Hope you enjoyed the analysis. Take care. Have a great day. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.